Hello, everybody. This is John Blank, Chief Equity Strategist at Zacks Investment Research. We're doing a call here on industrials. Want to get through my disclosures first. The views of myself, John Blank, are not necessarily the views of Zacks Investment Research, and past performance is no guarantee of future results. Keep all that in mind. We're going to go through today a deep dive into the industrial sector. I've broken this into three parts. Part one will be the market capitalization of our various industry niches within industrials. Then we'll get an enterprise value, which is related to market capitalization, forward 12-month rolling averages of revenue in these areas, and finally, finish up with some price to sales ratio for this group. Part two, we'll get into earnings retention, reinvestment rate, and CapEx, and we'll also quickly skip through total debt and assets and depreciation and amortization. Keep in mind, this is a real deep dive. You're going to want to get these slides from us later on, so you can review this at length. This is our system kicking out lots of information, and you're going to need time to absorb all of it, much beyond this talk. Part three, free cash flow per share, net margin, earning yield, and we'll finish up with the key valuation metrics, forward 12-month price earnings ratio, and the PEG ratio. So let's get going. All right, market capitalization, like I said, enterprise value, which is related to market capitalization, and the underlying fundamental of revenue forward 12-month. That'll be my main focus. I've also here got a slide on price to sales forward 12-month. This is our first step into valuation. We'll close that loop later on in part three. All right, so market capitalization charts. Note the variety of subgroups here. In each subchart, the first one listed here is the first one listed there. So for example, machinery tools, machinery general, containers, metal and glass, containers, metal and glass. The same is true over here. Thermal protection is over here, down there. Electrical and electric utility. Again, here's electrical, there's electrical utility. So keep this in mind. Later on, when you read this, these are our Zacks industry groups. And of course, I've got 2 in each chart. So I've got 12 here. I'll have a few more on the next slide. So what we want to see here is what's happened since the COVID pandemic in terms of the market capitalization of the stocks in these groups. So for example, we've got one here, printing, that has just plummeted. Obviously, we all understand that printing is a business that doesn't have a lot of traction in the computer world. And these ones that are in our universe are certainly not performing well. Conversely, you've got construction and mining tools, the green line, doing quite well, along with farm machinery over here. So even though we all know about the spike in 2021 and the sell-off after the Fed, what we want to see is that there's still buying going on. And we are seeing it in automation, in farm equipment, and in construction and mining equipment. And down here, we've got electric utilities. So by and large, you can see that things are actually okay in this business. Within the subgroups, you want to check for your stock picking leisure to find the companies. That has to be another level to this. All right, these are the other subgroups. Now there's 4 with 2 more. So 12 on that last slide, 8 on this slide. That's 20 subgroups. And again, we're looking for stocks that are really doing well. For example, linen supply, surprisingly stable pattern here. Whereas office supplies, really not a very good attractive pattern. Over here, you can see textile mill products, again, showing huge, bubble performance, printing bubble performance, but the textile mills, really showing the follow through. So you want to see this nice follow through. That is what you'd like to see. This bubble stuff is concerning. There's another one down here that's rubber and plastics. All right, so enterprise value, I put over here the story of enterprise value. This is a total value of the company. It's a more comprehensive alternative equity market capitalization. This also includes short and long-term debt and any cash or equivalents. So enterprise value is going to be a number that's going to track market capitalization. So we should see similar stories here that we already have seen. And of course we do. In this particular case, though, you can see both material holding and machinery, farm machinery are both going up now. So this gets interesting when you see stuff that is a little different. Over here is an example of that. Oh, again, do we see printing doing poorly? Yes, we do. That is here, you can see that. But again, when I look for the construction and mining firms, they're doing quite well. Down here, you've got your electric utilities, again, trending nicely. So once again, just a way to confirm what we've been learning in our other slides. All right, again, enterprise value, just want to repeat this, is market capitalization, but also short and long-term debt in any cash or equivalent. So again, we're looking for these patterns that are not bubblicious, like this one. Commercial printing doesn't look good. Linen supply does look good. Then you get things like this particular one, which is wire and cable. Wire and cable, because of the internet, is an attractive business. So here is an example of a post-COVID surge in investment. We always talk about industrials as a place to look for investments in the post-COVID world. And now you're seeing one right here, wire and cable products within our system. That is where you want to go. All right, revenue forward 12-month. This is the underlying fundamentals. So what you want to see here is, of course, a really attractive pattern like this or attractive pattern like that. So again, we're getting the farm machinery and the construction mining equipment doing what we hope they would do. Now, where do we see something we don't like? Well, that's actually here. Machinery electrical is actually seeing some declining revenues, whereas machinery and electrical utilities going up. So we'd like to check a confirm that the revenues are growing stable. We do not want to see a pattern like this. Keep that in mind. Again, over here, we're going to see industrial services not doing quite well, but the wire and cable numbers, those are the ones we want to confirm. We don't have these numbers for the last 3 years, but we do see them here. So not a full comprehensive review here because a lot of times we don't have some numbers here. But when we see something like this, pollution control, this again, if you're looking for an investment pattern, this is what you're looking for. Pollution control equipment out of the COVID pandemic exploded. That is exactly the chart you're looking for. And we know why that is because of the climate change and concerns out there. There's a huge demand for these products and services. All right, price to sales. I'm just going to put this out. I'm going to get through a much more comprehensive view of valuation with the forward 12-month PE and the PEG. But here I have price to sales, which is another alternative measure of valuation. Obviously, the higher the price to sales, the more overvalued the industry is, the less lower it is, the less valued. So here again, rubber and plastics not very well valued, whereas we have, again, linen supply doing quite well. Keep in mind, there's always many ways to look at these charts and in these industries. You're looking for correlations across all of them. All right, part two. We'll get into the big underlying fundamentals of earnings retention, reinvestment rates, and capital expenditures. And I'll skip through total debt and total assets and depreciation and amortization. Those are interesting measures, but they're not as important for stock picking as the prior three. We're interested in earnings, reinvestment rates, and CapEx most of all. So what is a retention ratio? It is a ratio that helps investors understand how a company can invest in growth over time. It is also known as the plowback ratio. Plowback is the key thing. The percent of your net income keeps as retained earnings after dividend payments are doled out. So the more you retain earnings, obviously, the more you're likely to be a growth company. A high growth company retains earnings. A value company pays them out of dividends. So this is the significance here. We're looking for reinvestment ratios, earnings retention that's strong. So for example, we've been talking about construction and mining equipment. There it is, out of the bubble, it's growing. We're looking for stories here. We've got a sub-industry, machinery, electrical, doing much better than electrical utilities, actually, but both quite strong. What we don't want to see is something like this. That's the printing trade. We've talked about this in other slides. It's a problem. So again, we want to get these confirms up here. We see it with materials and farm equipment somewhat coming up. We want to see this plowback and retaining of earnings going up. And here again, other industries, we would like to see some pattern of improvement. Reinvestment rate. This is defined as the portion of profit or cash flow that is reinvested back into the company. The reinvestment rate is expressed as a percentage. So again, we want to see this to be high and growing. So again, if we're not seeing this, but here an example where we got two construction and mining, we talked about it, farm equipment, both seeing reinvestment rates, and these two not seeing reinvestment rates growing. So this will be separate stories here. Again, the linen groups showing a very strong reinvestment rate. You want to see these groups very high if you're going to play these games and then find your way to greater profits and growth by holding these stocks. Capital expenditure. When people want to acquire, upgrade, and maintain physical assets like property, plants, buildings, tech, and equipment, that's CapEx. It's projects or investment in a company. And again, of course, we want to see this expanding. So again, machinery, tools, and construction mining are both coming up. This here again, you're seeing printing actually even, and industrial coming up. So this is the chart that tells you that people are putting capital investment back in these businesses. That's what you want to see. What you don't want to see is something like this. I would assume this, we'd have to check further about what this is, but that is something you would not want to see. All right, capital expenditure, like I said, there's always two charts here. The first has those 12 industry groups. This has the remaining 8. I put over here the descriptions for you about capital expenditure. Total debt to total assets. It's usually measuring a company's ability to raise cash from new debt. The higher a debt to asset ratio, the more it is leveraged. So you're looking here at leverage. That would be concerning in the idea that they could not put on new debt. This is not as important for us, so we're going to skip through this stuff. I just want to know that show you that it's here. Depreciation and amortization. Just understand that amortization is the intangible asset useful life, and depreciation is a fixed asset useful life. So where there's both tangible and intangible depreciation are involved in these charts. Again, just for your information and your understanding, a little more than we need to go through today. Part 3, we're getting into the final parts of our stock here. Free cash flow, net margin, and earnings yield are all kind of related. Then we'll get into the forward 12-month PE ratio and, of course, the all-important PEG ratio. All right, free cash flow per share. What is a good cash flow per share ratio? A higher ratio greater than 1 is preferred by investors, as it means a company can cover short-term liabilities and still have earnings left over. So we're looking for above a 1, and we're looking for uptrending improvements in financial health. So where do we see that? Here's an example where we see that. This one here, electric utilities. That is showing improvement free cash flow per share. Where do we see a poor producer? This is containers, metals, and glass. Again, there's some issues with less goods production now in a post-COVID world, more services, and you can see that we're seeing some free cash flow per share issues with that business. It's getting into the negatives. You want to basically, like I said, greater than 1 is preferred. So we'd like to see things above 1. And you can see here, they're just all going below 1 after a period above it. So basically, you can understand that there was some overinvestment in these businesses for a while now. There's a pullback. Net margin, 20% is considered good, 10% is average, 5% is poor. So what do we see here? We see a whole lot of stuff in that 7 to 10% area. Down here, stronger stuff that's in the higher level. Here again, thermal processing, really nice 15% margins. That's what you like to see. You can see some really nice variation here amongst these groups. Linen supply, we talked about it. Again, 15% net margins from 8. This is a great chart to look through. This I would bookmark for, again, wire and cable. You're seeing that huge surge. This has become a fundamental that I like because it's giving us nice breakdowns within these industries about what is going on here. So keep this in mind. This is a great chart. Earnings yield. Higher earnings yield is better. Anything above that's 10 basis points, 10-year, which is at 3.5, is a good earnings yield. So again, it's right here. You're going to be drawing lines at 3.5, down here 3.6, just at the lower end of this. And again, of course, right in here, you're going to want to go back through here, looking for these ones that are above 3.5. Interesting way to do this. Remember, you keep this information in mind as you look through all of this. Great chart, but I think net margin is probably a little better. Forward PEs, again, valuation always matters. Very tough though in a business like this. Changing a lot, and you can see, of course, the bubbling. don't be too worried about this. This is the share bubbling from the Fed money printing. You're going to have to discount that in your thinking here about the forward PEs. Once again, here's the other 8. So we got 20 of them to look forward to pulling through in a greater detail. All right, the PEG ratio. This is a key ratio for both valuation and growth. A 1 or lower suggests that a stock is fairly priced. Above says it's overvalued. So again, you're seeing that 1 play out here. You're seeing the 1 way lower. These are probably overvalued. Here again, these are probably overvalued. So you're looking at these industries, again, 1 or lower are undervalued. 1 or over may be overvalued. Always tough to know because obviously people buy stuff that's growing stronger. If people know more than you, they will buy it too, and a PEG, and that will work out for them. So keep that in mind. Here's the other 8. Again, we've got 6 charts with 2 each. That's 12 here. Another 8, that's 20 industries. This is always the case for these charts. You're going to want to get these from us. Thank you for attending. This is my talk on industrials. We're going to do other sectors in a row here. This is the start of that. Ones that I like, ones I put in my tilt, ones I think I'm bullish on. I would say after this talk, I would be selectively strong on a lot more inside industrials than I understood before. And I hope that's the takeaway that you got. Here's where you can get a hold of these slides, 866-794-6065, or at the email strategycall@zackspro.com, or at our website, www.zackspro.com. Thanks a bunch. And like I said, the slides are key in this type of material.